Hello, 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 everyone. Mike Arnold here, co-founder, Path Trading Partners, along with Bob Iacchino. Should be another interesting week in the markets. How is everyone doing? Just rolled out a couple new membership options so you can help support the channel. So I put up the weekly sector overview. This will probably be the last week that it is for non-members. So do keep that in mind if you want to continue to support the channel. Good afternoon, Patrick. Hello, Options 22. Hello, hello, Christoph. Hello, George. Good morning. Anissa, you're ahead of yourself. Good morning, good evening. That day went by quickly. Hope everyone had a wonderful weekend so far. Oh, I'm just put on a practice turkey in the new oil-free turkey cooker. So I like to deep fry my turkeys. I'm trying it in the new oil-free one though. I'm practicing. So we will see how that turns out. Guess I'm having turkey for dinner. All right. Again. If you are new here, please do consider subscribing, ringing that bell, and hitting the like button. Got that out of the way. Sorry, you don't have to apologize. It's evening, 23 p.m. Oh, it's late. Wow, you don't have to. I mix up mornings and evening all the time. So, Mike's a cook. Nah, I try my best. All right, let's just get through this. I actually do have a lot going on this afternoon, but want to be here. We've had a major, if you've in the crypto space, a lot's unraveling there. Tons of wash trading going on, trying to keep Bitcoin up. A lot of very interesting transfers going on. This whole thing's going to implode at some point, which will be good because then we'll get hopefully a lot of this riffraff out and looks like interesting tie-ins. I'll have to go into more of that later, but this is going to get very, very interesting in the medium term. And I hope people were listening, even though it wasn't Tether that blew first. We've been warning about this unraveling for been a long time. Separate from that, we have a busy week of trading. We have more earnings now. It's key week in retail. And last week we had one of the, I think it was the biggest short squeeze ever in the market. We've had what would qualify in the NASDAQ as in the top 20 rallies of all time. What's interesting, 16 of those rallies of the biggest of the 20 have occurred in bear markets. So, just another thing that probabilities state it's still a bear market, except for one thing. Well, it's still technically a bear market in the Dow, but I'll point out something. Again, in probabilities, unless there's something 100%, it's a probability. Even if something's 90%, there's 10% that it could be wrong, which is why you always manage stops and risk first. Mike, last time ES reclaimed the 50, we rallied the end all July. I'm expecting a rally at least through the next couple weeks. Also, Thanksgiving, not this week, the following week after, and that's historically a very strong bullish bias with thinner markets. We do have a ton of buybacks through the end of the year. Remember, buyback season is back in full force. There is an underlying bid. Now, I am watching for a pause and or at least slight pullback to gauge the strength of the follow-through move. We are in cycle toppy areas. Keep that in mind. Mike's been learning about Tesla and Bitcoin since last year. I remember how much hate Mike when he said anything negative about Tesla. A lot of it has come true, and you'll see, and I'm not being negative on these things. You know, I think things have to get washed out. We have a lot of riffraff in the markets. A lot of stuff has come in the last few years. And I'm just trying to get people, you can disagree with me. What I want to get through to people is manage your losses and manage your stops, both to the downside and the upside. If you're trying to short stuff, you got to manage it. Should we have a rally like this, you got to manage your losses first. The winners take care of themselves. All right. And the only way you're around long time generally is if you manage losses. Or unless you're an amazing gambler and got lucky and then pretty much walked away with a lot of the wins. But I wouldn't recommend that. Because you don't hear, and I was going to do a separate video on this. It sort of goes into this thing where people love to see people who made it big in business or in markets. Doesn't really matter. A lot, and I'm not talking all of them, but especially in the markets, a fair amount of people who have made obscene killings took a major amount of risk. What's interesting is they're the people who are still around, and then people look at what did you do? Well, they're the ones who put a lot of risk into a thing, and it paid off. I remember this from the trading floors. You'd have two people. They'd put in a ton of risk, and they'd be in opposite sides of a position. One happened to work out. The other, on the other side, didn't. You'd never hear from them again because they would not be on the floor anymore. They'd be working at Wendy's, delivering the vanilla and strawberry Frosties. But the guy, everybody wanted to know what the winner did, and all he did was took obscene amounts of risks. I've seen this repeatedly, but if he keeps doing it, they also can blow themselves up. The smartest ones where they caught a huge trade where they took obscene on a list, and then they're like, all right, I'm just going to bank that money and keep my risk really small. At least they learned from that aspect. What's interesting is people go and they try to duplicate some of these obscene amounts of risk things, and you don't hear from all the losers. Just like the people who ran it up, you run up with these vertical up, vertical downs, wipes out a lot of people, and you never hear from them again. And then the people who are still around try to chase the next one until they blow up. I'd rather see people manage things consistently, moderate your risk, keep stops, know what your risk is going into stuff, and so you can be around the next day. That's why I've warned about stuff that's not stable. And people can get away with stuff for a very long time, but eventually it does bite most people in the butt. And I don't want anybody on this channel to get bitten in the butt. I'd rather have you be around to trade or invest the next day. You want to be a long-term trader investor, be around for a long time. You don't need to make 100% overnight. So, good afternoon, Sashi. Niece from Eastern Europe, Romania, and it is very late there. Again, we appreciate you for tuning in. Hey, Daniel. Hey, Connor. All right, tomorrow, besides more fallout from crypto, which we have Brainerd speaking, and then very minor day tomorrow unless Brainerd says something. Tuesday, we got the PPI numbers, year over year and month over month. So, I mean, if they come in better, is it going to trigger more upside? Could possibly. You know, I'm going to still be paying attention to NY State, see if it comes better than forecast or even out of contraction. Other than that, we could have just more fuel on these insane rally. And I'm not talking that we rally all the time, but the amount of chasing the last couple days, Thursday, Friday, of a move higher was, again, it's in the top 20 NASDAQ rallies of all time, and 16 of those were in a bear market. Not surprising. On Wednesday, we have retail sales. Going to be interesting. Did you ever see that FedEx is putting workers on furlough for the holiday season because shipping is weak? Going to be interesting with retail sales. I think this is going to be the last hurrah for a lot of the consumer, and then next year is going to get interesting. So we'll see if that starts playing out with the October numbers, how strong the consumer still is from last month. Excuse me. Industrial production on Wednesday. We got more Fed Williams speaking. Fed bars testimony, some housing stuff, and of course oil on Wednesday. Then you have Waller. Thursday, building permits, but more important than that, is going to be continuing an initial jobless claims. Well, these key, I mean, this is previous, keep climbing up. So going to see that. Then we have some Philly Fed numbers and more Fed speak. I'm so tired of it. Kansas City Fed also in contraction. Will be interesting to see if that stays in contraction. Then finally Friday, you have Consumer Board's leading index. Prior in contraction by 0.4%. Forecast to still remain in contraction. Stock market map, if in case you didn't need a reminder. Pause in healthcare stuff. Energy was strong. I did post a sector overview. Healthcare is still in a buy for longer term. Defensive, but you had a rotation. These are considered defensive industries, healthcare and aerospace defensive. Not just because it's aerospace defensive, but it's also defensive sector. And those getting money pulled out to go into more aggressive plays. You can see the weekly energy still not much, but it did eke out a new sector high. Technology just with those rip your face off rally. Comm services, I did cover that in a sector overview. Not something I'm looking at to put it in. Don't get too, I mean, this is where it's helpful to put stuff into context because you still see the 3-month relative performance stuff. Yeah, it's getting a nice bounce back, but still some things are in long-term sell modes. 80-20 roughly for that 50 to 75 basis hike in greed mode. Will not be surprised to see this pop into extreme greed mode before we were done with this rally in the next at least couple weeks. Current market valuation, yield curve is back to strongly overvalued. Buffett indicator is fairly valued, but that's going to pop into overvalued again. PE ratio is back to overvalued, and those are the main ones I follow, so that's where we sit right there. All right, in terms of earnings, not much going on tomorrow before or after the close. I'm going to see what Tyson says. But Tuesday, you got Walmart and Home Depot, which are going to be pretty important. Walmart could actually be sort of market impacting, but this is going to be interesting from a consumer point of view, and Home Depot from with housing slowing down and from a consumer point of view. So those are going to be interesting. Advanced auto parts from a consumer point of view, especially with the used car market rolling over substantially, going to be not necessarily for this week's earnings, but going forward is going to give us a really nice point of comparison. Wednesday, Target and Lowe's and TJ Maxx from the retail point of view. Now, from a semis, you got NVIDIA, so that's going to be a big day Wednesday. Cisco, not as big anymore, but I always like to follow it. And those are the big things Wednesday afternoon. Thursday, be interesting. Macy's from a consumer point of view, and that's about it. Kohl's, minor. Thursday after, Gap, Williams, Sonoma, and Applied Materials. I know some people will be watching Palo Alto Networks very closely. And then Friday, very quiet day. Crypto finally looks like there's a ton of wash trading going on. Such a joke. But looks like we're finally getting that close below the 62.5. Looks like all those FTX was hacked after going into bankruptcy proceedings. This is just such a scummy industry. It'll be finally good to get a lot of this crap out of there. I'm just was watching to wait for this to close below the 62 and a half. You can see dip in, dip in, dip in, dip in right there. And now finally the breakdown play. Let's just get to the markets. Let me get to the markets can stay insane longer than a lot of investors can stay liquid, or traders especially. Hey, Brian. Retail earnings and sales both. Yes, thank you for putting that out. Business person. I really like that title. Business person. I like that. Remind me in a bit, George. Home Depot market cap is now bigger than Meta. That I did not realize that. I hope you're a subscriber to this channel, business person. I thank you for being here. I did not look at that. If that's Home Depot's bigger than is Home Depot bigger than a metaverse? Now, can you shop at Home Depot for the metaverse? That's what I'm wondering. It's the great American illusion that a company of just computers, Meta, can be worth more than something that deals intangibles. All-time high NASDAQ on Monday, November 21st, 2021. Dropped over 600 points in 2 days. Potential repeat given this crazy multi-day. I think something will blindside this market. I don't know whether it's the full crypto fallout just yet. It's going to have some ripple effect. That's why I'm really focused on this next pullback. I think at some point over the next couple months, something will blindside the market pretty hard and we could get a drop. Trying to time and predict that is literally insane at this point. So I would not be surprised. It's why I will stress trailing stops. If you're playing from the long side, know where your stop levels are. And you're not trying to call a top even on a short-term rally. Now, that's a great tie-in. Do we have more upside? Even if we pull back, remember 39.10, 39.12, right in front of 3,900. S&P daily chart is now major support. Why do I say that? Support here, bounced. So we had the sell-off going into mid-September, or first week of September. Bounce. Solidified this as a key support point. Broke mid-September. Retested. Prior support becoming resistance. Kaboom. Retested. Resistance. Little kaboom. Now it's gone through there. This is back to major support, especially with the rising rotation zone. So keep that in mind. Now, daily cycles at the top, weekly cycles at the top. I will be watching for the rollover play. This is what I call the secondary reaction. Get this through your head. The secondary reaction, we just had a very strong breakout play. This secondary reaction is the reaction counter to the short-term move. Will tell us a lot about the willingness and underlying strength of this move. I'm still expecting after a secondary reaction, we might not even get one. Could we theoretically push up to hit the 200? I'm expecting the 200 to be hit. I'm also expecting the 200 to be hit in some key stocks. So if you're looking for short-term plays, especially if you get that pause like Apple, went over this on Friday, closed above the 62.5, even with a pullback move, I would target the 200. You'll see a fair amount of stocks that have held key support or back above key resistance becoming now support. If they are within shooting distance of their 200s, pay attention to that in some short to medium term trades. You will be able to find some potential opportunities there. And don't bet the farm where you're still in bear market and you still have to manage risk appropriately. So the next areas I'm watching for 40.34, 40.59, and then 40.84 to the upside. Keep in mind, we get the close above 4,018. We could even see upwards of 4,200 price action. Key support, what I'm watching for overnight, I'm paying attention to this little rotation zone with the 4-hour rotation zone. Okay? If we break below, I'm bumping up this level just a bit. If we break below 39.63, it isn't a clear path move, and that's where I'm watching for that return to that 3,900 to 39.20 area. It is a pretty key support area there. If we started to get below that 4-hour rotation zone, especially on a closing basis, we then have this rip your face off clear path move from the CPI numbers. So we then all watch for the slightly bigger pullback. That slightly bigger pullback is going into a lot of secondary support. This was the primary support, the 39.12, 39.15. It's that area. Secondary support, I don't want you to ignore. Also, should there be a little bigger pullback, is this area from the highs at the beginning of October and the highs right before the CPI breakout is our next major support zone. So if you're trying to get in the bearish camp without a super duper topping pattern, there's a lot of support that has to be chewed through before I can look more aggressively to the bearish side. Will I be long or short tomorrow? Yes. Again, time frames matter. Am I, that again, are you talking a whole portfolio? This is why are whole portfolios, futures positions only, net stock, long-term options positions, trading against, like trading bullish moves against longer-term bearish positions? How do you want me to answer that? See, the right answer is yes. And my positioning should not matter to anybody here. Nor should your position to each other. You have to manage and trade your own account. You should be able to figure stuff out. We've had patterns. We had the little inverse head and shoulders pattern, which is still not played out, and I've told you what short-term targets I'm eyeing. And I've also said long-term, we're still not out of a bear market. Let me dump to Dow real quick. Why is the Dow interesting? Because we got a close above the 62.5 from the all-time highs in January. Probabilities, again, not guarantees. Probabilities say continue higher price action. It could even be to retest this high area from last January before the end of the year. This would be very interesting compared to 2000, 2001, where the NASDAQ started rolling over way before and money shifted into the Dow. The Dow held up a lot longer and finally cracked last. I'm seeing still a lot of money, even though it lagged a little on at the end of the last week with the short moves and rushed back into some technology. The Dow, is only off. I mean, where does it sit? What, about 10 it could rally 9% and then be up to the all-time highs? Is that out of the question? No. And that would not take the NASDAQ potentially out of bear market or the S&P. Or the Russell. Remember, the Dow's only 30 stocks also. So could be very interesting. The NASDAQ, slightly lower probability. but did trigger both daily and weekly, did trigger a double bottom. All right. Next targets. Here we go. Next target's almost is 11,890, so 11,900. Now we have a harmonic cluster. 12,057, 12,059. It's good. Why is this also important? That's the 62.5% level. Daily close above that. Look at the next target from the double. Lines up at the 75% harmonic. Got things lining up. Does that increase the probabilities? No. But it gives me stronger harmonic targets. 12,368. Then we have the double target and harmonic target happen to be the same. 12,677 with the declining 200. Really nice upside targets for some medium-term trades. Key support, I am using the high from, or the close from Thursday, about 11,632 as a key pullback level. And then below there, let me just double check something. Then below there, I am utilizing about 11,416. No double top. There was not one in the S&P either. If we do break below 11,634, we're into a partial clear path move, but I will be using that 11,416. So, cycles at the top. We'll be watching for that rollover play. Remember, cycles can also pause up here, and you could get some pullback, sideways corrective action to take cycles back to the bottom. But I am on alert because daily and weekly are at the top. We do have probabilities, though, shifting that there could be easily some more upside. Well, thank you, Connor. Just a Sunday sector overview is worth the $15. I hope more people think that you know, I try to provide a lot of really solid information that's affordable for people. And I put a lot of time into this, giving away a lot of what I consider good stuff. So I appreciate that info, that support, Connor. Yeah, I'll get to it, George. We'll get to SBR. I just wanted to give a recap because it's a good day to go over the markets since we have some things triggered. Little bigger pullback in the Russell. Russell now has held the 200 on a closing basis The last close above there was back in August. Gonna see what this is, but my major support is not the 200. That's minor support. It's 1857 area. And then below 1857, I'm utilizing this area right around this 1840. We still have some upside. Also, we had a harmonic 62.5, 1887.10. We closed at 1886.80, so no daily close above that level, and therefore not a weekly close. So the Russell did not eke that out yet. And if that does happen, that's only a return to this 1984 to 2033, and that doesn't even trigger the bigger potential double. DAXI in the key rollover zone, but the next minor target 14,607 to about 14,666. But 14,607, watching back to about 13,970 for key support 966. The notes, even if you don't trade this stuff, handy to watch, especially what's going on with the treasuries. Triggered the double on the daily. And on the weekly, slightly lower probabilities against the weekly rotation zone. The major area I'm focused on is this 114.12. Key pullback area is 111.27 in the short term tomorrow. Dollar index, I went over this in the weekly sector overview, so tune into that for the long-term position, but we still do have some more downside. VIX, little more downside. We also closed below the 62.5, so we could easily be returning to the 20 area before all is said and done, and we have a gap back from August still to fill. I'm still at, again, supports even on pullback, supports a more medium-term bullish case. Crude, still in this, it's just a little sloppy. This was an aggressive buy on Friday, but that's just a return to this higher area. Not super focused on that. Gold, I'm also watching for gold to reconnect after a pause. Watching for this to reconnect with its 200. Euro, went over some long-term stuff, but we still have this virtually hit the final target, so that's done. Watching for this, though, after a little pause to reconnect with the 200. Now, SBR. SBR. Sabine, is it Sabine or Sabine Royalty Trust? 8.8% dividend. I have not done a deep dive on it. You have a fair amount of support. Earnings is tomorrow. I would wait post, if you're not in something like this, I would easily wait post earnings, especially if you get a pullback. Because even if it breaks a little higher, it could just pull back to the prior key major resistance area. Also with weekly cycles at the top, daily cycles in the middle. So I'd be waiting for this post earnings. Let's just take a look at key support. 82, 80 area to the minor support levels would be about 82, 80 to 80, 76 for a primary support level. Beyond there, it'd be as long as it stays above 75, it's good from my perspective. Just weekly cycles at the top, so I wouldn't feel the need to chase it going into earnings and would only look to this, and you got the 50 right there post earnings. It could be interesting with that dividend yield. I'd have to do a slightly bigger deep dive into it, but it's in the energy stocks. So there could still be, I am also, I said from the energy sector, that it's trail mode now. It's a little overdone, watching for a potential pause, pullback before initiating what I'd be looking for new entries. This is trail mode from my perspective. And this would fall in that same category. So thank you for pointing that out, George. Hi, Alan. Targets on DPZ long from the 350. Well, thank you, Alan. All the best to you, too, Alan. So many wonderful people on this channel. Domino's. I worked for Domino's for years. Worked for Domino's for years. Helped put me through college. Domino's is another one you're going to eke out. I'd be watching these key areas, though, for especially aggressively trailing from the long side. You're going into a pretty hefty breakdown zone. Just seeing where if there's a key level in here. Eh. So continued targets, you have the 372.67. It just missed. As I said before, when I see this going into a close on a Friday, I always at cycle tops on the markets, I like to unwind more. Your next targets are 378 and then 390. You have a little gap here. So if you're trailing, that is key. Uh 359.65 is the first major level of support, and then back to about 349.50. So that's your support levels on pullbacks. That's where it's. I just want to take a look at the weekly. Up again, back against this weekly. So this is a key area. The only way I'd be playing this in the short term is if we do get above that and it can sustain above the weekly 200. And then you have a real interesting play to that 390. But this is against key resistance right now. So this would also be in a trail mode if you were going for a bigger play if you're already in it. And no, there's no great short just yet. MCK is now breaking down. Yeah, it couldn't hold. It looks like, yeah, but this is medical stuff. Healthcare, remember, healthcare is a defensive sector. Although it did hold up pretty well, even with the rotation out of some of the stuff on Thursday and Friday, it did hold up remarkably well. I would not abandon this stuff yet. In the short term, it might have a pretty key top in. You're trading against here. I would be watching right in this area for a potential bottoming move again. All right. After this major run up. And that would be for another bounce play. It just isn't one there yet. Wouldn't write this thing off completely yet. Hi, business person again. If Dow is 50 EMA cross over 200 SMA, does that make... Nope. Nope. Not a good... That's not a tested out strong signal. 50 over 200 is not a strong signal. So I do not trade that. Can I get your thoughts on PBR? Yeah, based off the election in Brazil, would be very cautious. Not like in Brazil now, and this is reaction to this. So anything to the bullish would just be for another rollover play. Would just be for another rollover play. Nothing. I am steering clear. Brazil is now in the short term to medium term off my radar screen, especially for energy plays. So any bounce thing, key resistance is about 12. First is 12, then 12.50. I will look for more rollover plays there. But if you're trying to do this from the long side, I think you're better off from a fundamental basis looking elsewhere at energy plays. Now, if this gets to a deep enough value, then it could be good. But this, based off Brazil right now, it's a higher risk play. And that P to E can get worse, even though it's a 2, because of what's going on in Brazil. ISRG is actually still somewhat decent. Let me clean up the chart here. After holding that 75, ISRG, let me reverse these real quick. Next little target area is this 275 area. Would not be chasing it here. I'll pull back though, as long as this does hold above the 200, which is coming in about 238, could be interesting on pullback plays in the short term. It's got, you know, it's back above the 50. It is with the weekly triggered to double. The major resistance area by harmonics is up at this 298.28. So still the first double pattern and the second are well within that. It's above the 200 again. So on any pullbacks, this could be a decent medium-term play. Even a pullback that would fill this gap would hold the daily rotation zone and just be a return to the breakout area from before. Now, preferably it would stay above this 248 area. However, if it were to fill the gap, it would still be within the daily rotation zone and not invalidate anything with the double. So this could be plays to the upside for Intuitive Surgical Inc. There's a good thing for people looking for some potential medium-term bullish plays. Can I tell you more advantage of the channel membership? Well, there's two different levels. There's just the basic, which, you know, you get some little things next to your name, and I'm going to start focusing more so on the comments of people that support the channel, and that's the cheaper level. I think it's $4.99. The $14.99 will give you the same benefits as that, plus there's going to be more videos I'm dropping for members only. So for supporting for a fairly low fee a month, you'll get some extra videos that come out there, just like the weekly sector overview, where I'll even be reviewing more markets. And it's another way to support the channel. And I'm going to take off probably ads, period. So things like that. I did play the Noid. We had a Noid costume. You are holding ISRG from 195. Well, that's a nice play. You had the other little double down here too. Double rolling into the bigger double. I'm still working on that, besides there'll be more videos coming out for members only. That's going to be one of the major perks for the higher term tier. But besides just supporting the channel, there's a couple people who do the heavier lifting here, and I'm trying to broaden that out a little more. A lot of stuff will still be free, so if you just want to maintain a free member and don't find it valuable, then that's fine. I mean, there'll be a ton of stuff still coming out for free. I'm here to help people. I have never been to Drummond, Ireland. I have never been there. Thoughts on Charter? I don't like communications. I think this is going to be a bear market rally, especially in communications. I'm watching for rollover plays in these again. I put that in the sector overview. I don't like communications right now. It could continue to rally. You're way below key support. You got a little more upside here. I mean, your price to earnings have come down for these again. I'm still expecting next year for earnings contractions. Any play is short-term plays in this only. So your first key resistance is 415. If it does eke that out, your major resistance 470. I don't know if it can have enough to get back in there. I'd be very cautious if you get back below 345. These were overdone. There were some, aggressive, very aggressive reversal patterns, buys down here, but nothing I want to be in longer term for communications from my personal standpoint. There's just too much overhead resistance. I find better things to play. It can consider to eke out a little more rally, but you're going into major overhead resistance. So the potential reward does not outlie or overshadow the risk. I was never at Drummond. Oh, Drummond Island, Michigan. I gotcha. No, I was never there. Never went there. All right. Hey, Coco. So that's where we stand. We'll get to some more things tomorrow. For overnight, what am I keeping an eye on? For overnight, I am mainly watching key support at the 4-hour rotation zone. The top of the 4-hour rotation zone. That's what I'm focused on overnight. Tom Monahan. Oh boy, that name brings back so many memories. What else? I think that's about it. I'm just peeking in at BitCrap again. Oh well. Let's see. Let's see if I can get that close below. Thoughts on the dollar dump? Check out the weekly sector overview. I briefly touch on the dollar in there, and you still have from the double top pattern 105.06 is the final target. We could get a little, if the markets pause / pull back a bit, you could get a little, it's very oversold, so we could get a snapback rally. I will be paying attention to the daily rotation zone coming in about 107 right now. Yeah, we should see a much more substantial pullback in Bitcoin. With that, I hope everyone has a fantastic rest of their Sunday. And I shall be back tomorrow morning. Thank you, everyone, for tuning in. Bye for now.